Welcome to Monday Night Live, the weekly training that guides professionals to financial prosperity. Join our community and let's start building your wealth.
So let me go and introduce you. So everybody, this is Joel Miller, and I was introduced to Joel from Joe Herbert, who's from Erie, PA. And I think Joe must have been in one of your group sessions for the apartment association. It's maybe how you met, but you can get into that. But I've interviewed Joel guys already. I've met him, and this is going to be a good class. So get ready, take notes. It's all about investing, but he goes a lot deeper than that. What Joel brings to the table is far more valuable than how you can invest in real estate. I mean, his experience, his life experience, um, as far as organizational structure, business building, mindset. I mean, he really is, you know, one of the best. So Joel, now that I've got your head as big as a
Yeah, I was going to say,
zephyr,
I actually
come
have to
aboard.
perform here tonight somehow now.
Yeah. And by the way, you're allowed to share your screen too with a coach if you have anything you want to share, or there's a
Yeah,
PowerPoint, anything like that at all.
I might do that. Okay,
Okay.
Gary, thanks. Yes, you may recall Joe Herbert being one of the people in the class, or I understand he taught once or twice as well. Is that right?
I think twice now. Yeah. Hmm.
Yeah, Joe is a broker, real estate broker in our area here, and I've known Joe uh, for quite a number of years. And when I was president of the Professional Organization of Landlords, I asked him to come on the board, and he was on during the time that I was president. I've bought property from him. Some of my best property is stuff that I got from him as he moved along in his journey. And so when I wrote my book, I ended up wanting to include some things that Joe had, I think he'd actually prepared them for one of the apartment association meetings where he was the speaker or something like that. And it's in the area of uh, due diligence questions and so on. And I was looking at him, and I didn't want to just copy him, so I ended up getting Joe's permission to use them. And so Joe is quoted in my book, and in the acknowledgments in the front. I really appreciate that relationship. He's become a good friend. So let me just tell you a little bit about myself. Now, what we're going to talk about tonight, though, once I finally get to it, is hard money lending. And I know that, Gary, I believe that most of your listeners are realtors. Is that right?
Yeah, it's mostly real estate agents and from different brokerages. Our team course is going to be largely represented here, the Global Investor Agent Team, but agents and brokers from different companies around the U.S. and Canada, as well as
Mhm.
investors too. So we get a handful of
Okay.
investors
So we're going to be
pretty
looking at hard
regularly.
money lending really from four different angles. Number one, uh, as a borrower, you're the one borrowing hard money lending. Number two, you're the one making the hard money loans. Number three, you are a realtor that is helping one of your clients, an investor client, presumably, because we typically don't do hard money loans on personal residences. Um, Helping one of your clients obtain a hard money loan in order for you to make a sale. You're assisting a client in buying property, and this is one way that it might make the deal work. And the fourth way is you don't really care about any of this at all. You're not going to be any of the three above. So, but you'll learn something. And but that's the subject that we're going to be talking about. And I'm going to experiment here. Let me share my screen. Let me see here. Can you guys all see that?
Yeah, it's
That
good
the
too.
book? Yeah.
Hmm.
I just briefly wanted to show it. This is my book. It's called Build Real Estate Wealth. And the subtitle is "Enjoy the Journey of Rental Property Investment." And I don't know, can you see the top, or are you seeing this band of options?
It well, the top says the Big Book of Income
Yeah,
Property.
okay, so that's not blocked
That's
out. I've got
yep.
a tool band that's covering that part of the book. And yeah,
Okay.
when I was writing the book, and I'm telling people about it, they say, "Oh, that's too long. It's too long." Well, I had to put it all in there, and this ended up being like over 450 pages long. And when we went to publish it, we decided we're going to own this. I mean, we're gonna be known. We're going to call this thing the Big Book, because it is. And uh, it became a bestseller already last year, and so that's why we have that label on there. So I just wanted to show you that. And just so you know, my website is joelmillerbooks.com. That's JOELMILLER BOOKS, plural.com. And if you're going to search for me online, I would suggest that you say Joel Miller Real Estate, because otherwise you'll find out a lot of information about a video game character with the same name
Mhm.
that is quite popular. So, and I didn't even know about that until I, started searching for myself. But anyway, so just to tell you real quick, uh, the premise of the book, and I'll tell you a little bit about me, and then we'll do the teaching. It's written for people who don't think that real estate is really for them, as well as people who want to supercharge the portfolio that they already have. The idea being that rentals can be added to your life, your already busy life, along with a career or a passion that you have that you don't want to give up, for the purpose of increasing your income and bolstering retirement. I'm sure you know that a lot of times people are involved with careers, jobs, passions, whatever, that aren't going to really provide them much of a retirement, and that's the whole idea of income properties is um, uh, to produce income and grow in value. So I make the points that you need to kind of clear your mind of overly negative and overly positive things. Like Gary was talking about, it takes us all the way from mindset through um, the operation of rental property. I make a point that you can control the value and the cash flow to a much larger degree than with stocks or other investment, any kind of investment you buy on an exchange. You can control the value because of doing things to increase the value. You control your rent and so on. And rental income is residual, of course, not related to you performing a specific task. And work needed on a property can be performed by others. And you need some education before you get started, but you don't need to know everything. I emphasize you only need some. You just got to get started. Just buy the property and associate yourself with like-minded people and operate the property, and you will continually be learning and taking yourself to higher levels of ability, which will open up other properties to you. And no matter how much education you get, it takes action to see results, and
Mhm.
it takes commitment to see success. So you can read all the books you want. If you don't take the action and make a commitment, nothing's going to happen. So having said that, just to tell you a little bit about me, I live in Erie, Pennsylvania. I've got my formal Great White North flannel shirt on tonight. It's been pretty cold here. It snowed every day all month. But two things happened to me in junior high school that really set me on my course that I have with the careers that I've had. And that is number one, I had a paper route, and an investor built four-unit apartment complexes on the edge of our subdivision. We all lived with our parents in single-family homes, and there was these couple of lots on the outside edge. Somebody finally bought them and put up the apartments. And not only did I get them on my paper route as customers, but I have a distinct memory. You know how you have a memory of sometimes where you were when something happened. like maybe when a famous person died or something like that. In my case, I have a memory of distinctly in my bedroom one day doing the math on rental property and saying, I want to do this. This is cool. People they're not gonna own this. They're just gonna live there, and they're gonna pay whoever bought these or built these things more money than it's gonna cost to operate them, and they're gonna go up in value, and somebody's gonna sell them someday, and they're gonna make some money. And so I just kind of did that, put that in my back pocket. In the meantime, the second thing that happened was one of the older kids in the neighborhood built a pirate radio station in his basement with a antenna, which was a flagpole in his backyard. And I got to hang out there. So the other thing that happened was I decided also in junior high I wanted to be a disc jockey. So I began working at radio stations actually did production work in high school, and then I went away to college, worked in the college radio station. I got a BA in accounting in like 1976, and right after college, I actually started an accounting practice. But simultaneously and I was already full-time in radio by the time I graduated from college. And simultaneously to getting the accounting practice going, I also left the radio and began doing what you may know as mobile DJ appearances, like the guy that does the DJing at the weddings and high school dances and all that. I pioneered that in this part of the country. And I actually left and I sold my accounting practice to do that more full time and invest in rental property more, because only about a year and a half after I did my first mobile DJ appearance, I did in fact buy my first rental property. And so I ended up DJing for 35 years. I did 5,051 appearances and retired from that in 2011. And meanwhile was growing my rental property portfolio. In 1991, I started doing flips, and I've done over 100 flips in our area. And then in 2018, I did what we're going to talk about tonight, which is I began making hard money loans to the other investors to help them, in their journey. And along the way, I, as I mentioned, became involved with the Apartment Association of Northwestern PA, which is the professional organization of landlords in this part of the state. I was in leadership there. I've been in the board since 2009. I'm our second longest serving president for like 6 years. I'm in my 8th year as a VP, because everybody that gets elected president after I was president keeps asking me to be their VP. But along the way, I discovered a passion to boost new investors in their journey, and that's where the hard money lending came in. And ultimately, then starting in 2020, when I had more time on my hands, stuck in my house due to COVID, like everybody else, I started writing this book. And it took 4 years to get it to where it was released last year and became a bestseller. So that is where we are at as far as where I'm coming from when I'm talking about this whole hard money lending. I made 2 hard money lending loans today. Deals to one for 60,000 and one for 120,000. That's just, that's what I do. I'm not even looking for any more rental property, and I just enjoy doing that a lot more. But did you guys hear about the landlord that was seeing a psychiatrist and a clinical psychologist and a licensed counselor? Yeah, he had an apartment complex.
We'll take it. Hey,
yeah,
it's G-rated. We'll take it.
You're all welcome to turn your mics on and groan. Okay. But of course, you guys are realtors. You know why the realtor was in counseling.
There you go.
Get closure.
That's a time joke. I'll laugh when I get time.
Couldn't get closure. That's why the realtor was in. But anyway, all right. So let's talk about hard money lending, and I'll get my thing here now. One of the other points I make in the book is when it comes to the financing part of it is make a point that it's actually easier to get the money for a given deal than to find the deal. Especially if you're looking at investment property. If you find a good deal, you're probably going to find a lender that'll finance it. And the customary way, of course, is bank loans, but you need to have hard money lending in your toolbox, in your tool belt, or whatever, as one of the ways that'll make the deal occur. Now, hard money lending is typically private money, but not all private money is hard money lending, because after all, owner financing is private money. Or if you get somebody to give you money to buy a property that is for a long-term mortgage, it's private money, but that's not a hard money loan. Hard money loans are typically, interest only and for short terms. So I'm going to go to actually page 98 here in the book, because it's put better here than I could just spout it, off the top of my head. Hard money gets its name from the fact that the loan is approved more on the viability of the hard asset backing the loan, real estate for our purposes. Okay, so that's why we call it hard money. In effect, it's kind of like easy money lending, but it's called hard money. So hard money lenders are the source for buying and rehabbing properties that banks will not lend against because the property in its current condition, or you in your current financial position, do not fit into the bank's comfort zone for making loans. Additionally, established investors may use hard money to take advantage of an opportunity that is only available to them if they can pay cash, no financing contingency in the offer to purchase property, in other words, and close quickly, which banks cannot do, even though they otherwise would have been able to finance the purchase with conventional lenders. In other words, from a personal standpoint, they qualify. It's just that they might need to take it. They want to take advantage of a deal that they're not going to be able to get if they have to put a financing contingency in the offer, and take as long as it would take for a bank to close. So hard money lenders typically loan under one of two scenarios. We're typically lending if the investor is borrowing the money to buy and or rehab a single family home, in which case they are going to sell that property to a third party who's going to live there, which, as you can probably already recognize, that would be a flip, in which case we get paid off, the lender gets paid off at the closing to sell the property. The other scenario is when an investor is borrowing the money to buy and or rehab a keeper rental property. In other words, a property that they want to put in their portfolio, and they need to stabilize the property in some fashion, which might be a rehab to improve its physical condition, or raise the rents either with the existing tenants or get the existing tenants out, put different tenants in there, higher rents, so that they can position the property to get permanent financing from a conventional lender that would be long-term financing for the future, because they want to hold on to the property, in which case the hard money lender would get paid off at the time of closing for the refi. Now notice I said buy and or rehab. In most cases, we're lending literally 100% of the purchase price of the property. But sometimes the lenders, as was the case with two loans that did last week, they already own the property, and what you're lending them for is the rehab of the property. So they already own the property, they're borrowing the money to do the rehab. Sometimes, and this was the case today, the money is borrowed against a property that they own free and clear to be used on a different property altogether in their portfolio that they are rehabbing for whatever purpose, either to flip it or to get permanent financing on it. as a rental. And in most cases, believe it or not, I'm lending 100% of the money to not only buy the property, but also rehab the property. Now, if you are borrowing money for rehab, you're not going to get it all at one time at the closing. Let's say you are paying $50,000 for a property and you're going to put $40,000 into it, just off the top of my head here. We would probably allow $15,000 of that $40,000 rehab money to be given to you at the closing, which literally basically just goes against closing costs. And you leave the closing as a borrower, purchaser, with money, not a whole $15,000, but a good portion of it, maybe $10,000, $12,000, who knows. And then the rest is held in escrow in our attorney's office, where it's out of my reach, but it's there readily for you to be released in probably 2 to 4 draws on as you work your way through the project. And that's a very loose thing. You know, when somebody says that they're ready for a draw, they might text me and ask for the next draw. I said, great, you know, I'll either do one, two things. I'll say, hey, send me some photos and tell me, you know, what I'm looking at here. What have you done so far? Or I might say, okay, hey, I'd like to come and view the progress here. The idea is, if you're a lender, you want to make sure that the money for the rehab portion of this loan is actually being spent on the property. And I have actually seen one in particular hard money lender in our area several years ago that gave all the rehab money to the buyer, and it was a substantial amount on a few different loans. And before they all went bad, you know, all the money's out there. And what the investor did was take all the money and then make some sort of an arrangement with tenants that were there on some sort of a deal that he made with them, that they were supposed to be doing the rehab, which never happened. And this lender actually had to go through a foreclosure on several properties and left the hard money lending world here for a number of years. She's just cautiously gotten back into it in the past year or so. It's very bad, you know. So those are the two scenarios: either keeper rental properties paid off for the refi, or a flip paid off when you sell it. As I mentioned, the loans are typically interest only, and the payments are, you know, monthly. And at least in our case and around here, what's customary is you're going to make a monthly interest payment. And what I do, since we don't want to get into prorating interest, buying the property, we just make the payment due on the anniversary of whenever you close. So if you close on the 22nd of the month, your payment's due on the 22nd of the month every month, and it's a set payment of just the interest. Now you might wonder, well, okay, well, what if you don't get all the money at the closing because it's set aside in the escrow account for the rehab? Doesn't matter. It's out of my hands. I've lent the money. I can't do anything else with that money. So you're actually paying interest on the full amount of the loan each month right from the beginning, even though you don't have all the money released from the escrow account. But the advantage to you is that you know that money is in fact available at a moment's notice, and you're not going to be faced with a situation as a borrower calling up your lender and saying, okay, I'm ready for that $10,000 draw today if you can get it to me. And the lender says, I'll tell you what, I'm waiting for a closing payoff. Can you wait till next Tuesday to get that draw? You won't be faced with that. It's like in Popeye, you know, Wimpy or whoever it was wanted to borrow money to buy a hamburger, and he'd pay you next Tuesday. You know, it's not, you don't get any of that. It's there at an intermediary. It's in the attorney's escrow account. That's why you pay the interest on it right away, but you just don't have it because you have to work your way through the project. But it's available to you at a moment's notice. So you've got your monthly payments, and now I'll just give you the typical rates that we have around here right now. It's 12% interest and 5 points, and I'm sure you all know what a point is. 1% of the borrowed amount. And so, to give you an example, if you are borrowing $100,000, you're going to have a $5,000 fee going in. That's something that's paid in advance. Now, different hard money lenders have different amounts in different areas of the country that they use. I don't really know for sure of any other ones outside of around here, but this is what I do is customary in this part of Pennsylvania, at least. So you would have the $5,000 fee, and your payment would be $1,000 a month. However, I will say, and you should keep this in your tool belt too, if we've done a few deals with a given investor that have gone the way they were supposed to go. In other words, they were able to take this rehab across the finish line and get it sold at a profit, or get it refied with a bank and pay us off. At the borrower's request, what we might do is finance the points, or maybe half of the points. And the way that would work is that instead of paying the $5,000 whenever you got into the loan, you would pay that when you paid it off, but it would be added to your balance. So you borrowed $100,000. We're going to fund you $100,000, but your mortgage is going to be recorded as being $105,000, and your payment is going to be $1,050 a month, because essentially I loaned you the $5,000 to pay me, too. So that's the way that works. But sometimes they only want to finance half, like $2,500 in my example. It's flexible. It's whatever helps them meet their goals, because obviously the $5,000 comes out of their first draw, or if we're just lending them money to buy a house, then that's another $5,000 in closing costs that they have. And it's out of their usage from their personal funds until they sell the house. So the other thing that I tell people when they call is that we're not your first stop. You shouldn't view hard money lenders as being some place that you go for money for yourself, or if you're guiding an investor client to use a hard money loan, if it's their first purchase or they're just getting started. This is all very much done on a relationship basis. And by that, I mean that the underwriting is very loose, not the documentation. I'll get to that in a minute here. If the proper procedure is that somebody that wants a hard money loan, they just call up and we talk about it. And if it sounds like it passes muster over the phone, the next step is for me to actually walk the property inside and out, of every unit, if it's a multi-unit place even. And, I've been in this business this is 47 years ago this week that I bought my first rental. And like I said, I've been flipping houses since 1991. So my number one rule is I'm not going to lend money on any sort of a scenario or a type of property that I haven't done, and I wouldn't know what to do with the property if I got it back. Like, for example, I don't do loans for retail establishments or restaurants or something like that. It's strictly hard money on secured by real estate in my area here. So I meet the people and we walk the property, and I just start asking them questions like, hey, have you seen this? What do you think about this? What's your plan for this? And did you know you could do this? That sort of stuff. And we get to the end of the walkthrough, and I can tell you, Gary, sometimes the people are absolutely sure they do not want to buy that property, because I asked them the questions that made them realize that there was other stuff to think about besides what they were already looking at. But let's assume that it does look like a viable project. Then a good hard money lender should be able to tell you right there on the spot whether they're going to do the deal or not, or if not right on the spot, then at least within hours or the next day after they do something that they need to check on, you know. But I basically can tell them what amount that we would be willing to lend, and what the terms are, and just plain old whether we're willing to do it or not, right on the spot. And then I come back to my office and just send them an email that has their loan terms, and all they need to do is reply to that email, and that they agree, or call me if they have any questions. And once they reply, I agree, then it just gets sent off to the attorneys for a regular closing. And that brings me back to what I said I would come back to, which is that although the underwriting, as you can see, we just spent, like maybe an hour altogether on the whole underwriting part of it, which included visiting the property. On the other hand, then the paperwork is locked down. I mean, it's the same as if you had a loan from a bank. In other words, Pennsylvania is a mortgage state, so what we have here is we have a note and a mortgage document, and I would have them sign a assignment of rents in case that needs to be put into play. In other words, they're getting the rents from a property and they're not paying the mortgage. We can show up and tell the tenant that they need to pay us. I think you all know how that works. We have a mechanic's lien waiver for their protection if it's actually going to be a case where they're hiring somebody to do the work. And a lot of times we don't use a mechanic's lien waiver because a lot of times these investors are essentially general contracting it themselves, and they're not necessarily hiring a contractor who's hiring subs and all that stuff. But the mechanic's lien waiver does come into play a lot. And we have them sign personal guarantees outside of their entity. And by the way, in case you were wondering, yes, we will make a hard money loan to your LLC or your limited partnership or whatever it is, your corporation. Doesn't matter. But you will sign personal guarantees outside of that. And that's just the way it is, So those would be signed at the closing. And if you have a single person LLC and you're married, your spouse is signing too. That's what we do. And then my favorite document, which I've never had to use, but I just love the fact that this makes this hard money loan thing fly so nice, is a deed in lieu of foreclosure. I think you all know what a deed in lieu of foreclosure is, and in that it avoids the necessity of a lender actually foreclosing on you. It saves them the expense and time of doing that, and it saves you as a borrower the embarrassment of going through a foreclosure, because it means that if the loan's not going well, and we've talked, I mean, this is not something that gets recorded with just out of the blue. This is a deed in lieu of foreclosure that's held in escrow by the attorney. I don't have, but if you're not performing on the loan and we talk and you say, look, I'm just not going to be able to pay this. I've had other things happen, and this is just not going to work out. Then we just agree, we're just going to record the deed in lieu of foreclosure, pay the transfer taxes, and the property is ours. Which is why I don't lend on anything I wouldn't know what to do with if I got it back. Unfortunately, I've never had to do that. What we have done on a few occasions is just simply rewrite the loan and have the person start all over. Now, what do I mean by rewrite? Well, as I mentioned, typically hard money loans are short term, usually a year. Now, what we do is we have an automatic 6-month extension, which means that if your project's going longer and you just need more time to get this financing across the finish line, so to speak, I don't want to wreck your project. I don't want your property. I do want my money back, but here's a compromise. You can automatically, no questions asked, just automatically just roll into a 6-month extension, but the interest rate goes from 12% to 18%. There's no more points to pay. but you're going to start, your payment shifts to being 1.5 times what it was before, because the interest rate's now 18%. But I've had a couple of instances where somebody ran out the other end of their 6 months at 18%, and they were still having trouble with the property. And so we just rewrote the loan. We went back to 12% interest for a year with a 6-month extension, but they paid the points a second time. It was like I had gotten paid back from them and then lent it out to somebody else, but it just happened to be the first people that just paid me off that I lent it back to. That's what it amounts to on our end here. So, that's what we've had to do on a couple of occasions. And I can tell you that one of the instances that caused that to go past the 18 months was difficulty in getting a refi on a single family home that was originally supposed to be a flip. And this is an example of an inexperienced investor. This guy had already done some things, but somebody before, or else I wouldn't have lent to him in the first place, but somebody got in his ear and said, hey, why don't you do a lease option on this property and put some tenants in there, give them the option to buy it, which of course is a viable thing to do. But in this case, what that meant was he made this really bad deal with somebody. They had like a 12-year option or something like that to buy the property. And anyway, it kind of messed up it clouded the title in such that he was having difficulty getting permanent financing from the bank. So as a result of that deal, number one, like I say, it went longer, and we ended up having to rewrite the loan. But as a result of that deal, we ended up adding a new clause to the loan terms that we typically have, which is that the borrower is prohibited from entering into any kind of a lease option or land contract type agreement with any third party while the loan is in effect. Now, why is that important? Well, I can't speak for any other laws, but in Pennsylvania, here's the way it would work. If under normal circumstances, if the borrower didn't pay the loan, we could either foreclose or record the deed in lieu of foreclosure. But if we have if the investor has put somebody in there with a land contract, or a lease option, those people now have an equitable interest of some sort in that property, which prevents us from recording the deed in lieu of foreclosure.
Hi, I just want to take a moment to thank you for watching a recording of the Monday Night Live class. Hope you're getting a lot out of it. I'm sure you will. I wanted to let you know that, you can come to Monday Night Live whenever you want, but you can also participate more with the team. Why don't you set up a call with me, a one-on-one strategy call? I can go over everything with you, show you everything that we have to offer. For example, did you know that on our team, not only do you get your leads, we actually give you your own account on our lead gen system. So this puts you in control. You're not waiting on somebody to hand you leads. You get to pick the ones you want. Okay. Huge difference. We have 21 of our own proprietary marketing campaigns. They're all copyright protected. We're the only ones that can use them. Okay. The coaching is absolutely one-on-one. We got 3 coaches. We even have a 4th success coach that we have access to. Okay. One of left fewer than 100 in the world. Okay. One-on-one coaching. Right now the big problem is volume. We need more transactions. We need more inventory. I get it. Well, we know how to get it. Our team actually outproduces the national average by more than 2 to 1. So if you're struggling, don't do that anymore. If you're a solo agent, if you're a team, let's just talk. Smart entrepreneurs are always open to discussion. Learn what we have to offer, and then you can make an informed decision about staying where you are or moving on. You've got to decide, if you're not where you want to be, you've got to take action to get where you want to be. Let's see how we can help you do that. I look forward to talking to you. Click on the link, set up a call. And by the way, I'll see you on the next Monday Night Live.
What does that mean? That means that even though it would be easy to do that if it was just the lender or the borrower rather that was involved, we now have to go completely through a foreclosure to divest the interest that that tenant has in that property, which costs a lot of money, takes a lot of time. So we ended up adding that clause to people to the loan agreements that prevents them from doing that. And and everybody accepts it. They understand what was going on. So that's kind of the hard money lending thing in a nutshell. So what I thought I would do is I will put this thing on the screen here. If I can do this. Let me see.
And hey, Joel, while you're
show
doing that,
Yep.
when you get a break,
Yeah.
on your underwriting, like, do you have a standard formula you're using for determining if you're going to give it a green thumbs up or a big red X? Like, other than the property itself, like the actual borrower, there's certain
Yeah,
credentials
that
you're
is
looking.
the second of the two documents I want to put on screen right now. Right now,
Okay.
real quick, I just want to recap the. Let me share this here. Let me see here. Go back to that. Okay. Share screen and. All right, are you guys able to see that or no?
Not yet. When we first started, we were able to see the book. But I
Yeah,
think you may have to stop sharing and then start it again.
yeah.
And what you
Okay.
do is, on your screen, you hit share. On
Right.
your next screen,
Okay.
you'll see all the sessions you have active. Always choose the upper left-hand corner. That'll keep it,
All right.
whatever you're sharing will be whatever screen you're on, versus you having to switch from browser session to browser session. And if you guys if you have questions, go ahead and write them down or
Yeah,
type them in the chat
go
box.
ahead, or if you want to break in um, with your microphone, that's okay too.
Yep. Because this will come up with investors with some regularity, and it's nice to be able to explain to them that if they can't get conventional financing or don't want to, um, private and or hard money lending is the next best option typically. Um, and I will tell you, I know investors who, even though they will qualify for conventional financing, chose not to do that on a flip because they didn't want to, keep using up their credit report and their goodwill and
Mm-hmm.
all that kind of stuff. So they would keep this. They would do the hard money and only do conventional financing at the end when they were ready to, refinance when they're keeping a rental. Flipping it didn't matter because they would sell, pay back the lender right away.
Right.
So,
Are you able to
okay,
see
sorry about that, Joel.
this document now?
Yes, hard money loan
Okay.
features.
All right. Yes. Good. Just to expand on that, the two main advantages of doing hard money lending are the speed that it can be done at, and in other words, the banks are just a lot slower, and number two, the underwriting process is not near as involved as it is with a bank, and that's the whole idea. Is that for flips, any kind of conventional financing with a bank is just impractical. I mean, why are you going to get a mortgage on something you're only going to hold for 8 months and pay all those, closing costs and go through all the hoops and all that stuff? So, and the same is true for the keeper rental properties. Why would you get a mortgage on a property at its value now when you are immediately going to improve it physically and with the rents and so on, so that you now can get so that you then could get a higher appraisal, and then turn around in a relatively quick period of time and get a second long-term mortgage on it. It's just a lot of dealing with banks that you don't need to mess with. But anyway, here, these are just the main points, the main features of a hard money loan. If you are negotiating a hard money loan with a lender, you gotta, there's interest rates on the loan itself. There's the points, and whether they're not going to be financed or not. Did somebody say something? Oh, okay.
Hang on, let me see if somebody might not realize that they're
Okay. And
unmuted.
you may be able to borrow 100% of the purchase price and 100% of the rehab. Sometimes guys don't even want to borrow all of the purchase price, for example, because they have their own funds on hand. Why borrow the money when you have the money already? Because it's not cheap, but it's convenient. That's all. So the length is typically negotiable to some extent, but it's typically a year. Although I know I forgot to say something earlier. Oftentimes we will start with an 18-month time period for a loan that's on a rental property, especially if it's multi-unit, because we recognize that it may take longer to rehab 2 or 3 units than it takes to rehab 1. And you also might be wasting time after you take possession of the property, getting out the existing tenants before you can even start. So we've done a bunch of those where the initial term is 18 months and then a 6-month extension on top of that. The next thing is the soft landing clause, we call it. That's the 6-month extension, 1.5 times the interest rate. No prepayment penalty. I didn't mention that. If you pay me back in a month, great. It's fine. We will just prorate the interest to the day at the closing. So if you've made a payment when it was due on the 15th and we close on the 22nd to pay it off, you'll just have like 7 days interest or whatever at the closing. Late fee, is typically stated right in the loan terms. Might be $30, $40, $50, depending on our average loan is around $100,000. But I've done them as small as 20 or 30. The one I mentioned the other day from last week, 60,000, but we've done $250,000 loans. So they just kind of make up. It's not a set percentage for the late fee. Somebody else might have a set percentage. I just kind of gauge it according to how big the loan is on an even amount. Yes, you can take the loan in the name of your entity, like I was saying, but you're going to sign a personal guarantee. You can have a mechanic's lien waiver if that seems appropriate, deed in lieu of foreclosure, assignment of rents, can enter into a land contract, and so on. If you guys want to take a picture of this, I'll when I'm done here, I'll put it where you can do that. Also, we do make the borrower pay for all attorney's fees and recording fees. I don't have any of that. It's an expense to us. So if you want to be a hard money lender, just like the bank, you're going to make your borrowers pay for all attorney's fees for creating any documents like the note, the mortgage, the deed in lieu of foreclosure, along with whatever other documents that they're paying for to acquire the property. So and then later on, whenever the mortgage is going to be paid off, you're going to be paying the recording fees and the document preparation for the satisfaction of the mortgage and satisfaction of the deed, or whatever it is you guys have in your state that is done at the time a loan is being paid off. You're going to have to provide proof of insurance. We get on the property insurance policy just like any other bank would be, and this way we know if there's ever any lapse in the policy. And you got to provide proof that you've paid the annual real estate taxes. Usually this doesn't come into play because people don't even own the properties long enough to get another tax bill. They end up paying all the taxes current whenever the loan started. But if it did go a long time, then you would have to show proof that you paid. This came into play one time when we had a loan that was on a blanket. It was a blanket loan with an investor who went extra long, and we ended up rewriting the loan for redoing all the points and the starting over at the lower interest rate. Our attorney's office discovered there were unpaid back taxes. So I made the guy bring all the taxes current, or else I wasn't going to redo his loan, which was a good thing, because another year and it would have been in the tax sale. You also should expect the hard money lender to be able to come in and make reasonable inspections and so on. And you can, if you're buying the property, you can use your own attorney if you want. But one thing that I do tell my clients is, if you want to use the attorney that we typically use for the preparation of the documents for our part of the whole transaction, it'll end up saving you a little money, because it's all in one office there. So that's what we tell them. And so quite often our attorney does get the business out of that. But here, I don't know if you can see the whole document. There, now you can see.
If you want, Joel, we have the email that goes out tomorrow with the recording to the students. If you will email it to me, I can give it to Sugar to put in that email.
Yeah, I can do that too. Okay, now, Gary, to answer your question, you see this other document now?
Okay.
Okay. So this is what looks like an application. Although I will tell you that I typically do not have people literally fill this out. What I tell them is, these are the questions that you need to have the answers to if you call me about a deal. So, just to back up, when somebody calls me that I haven't already done business with, at the conclusion of our phone call, I email them both of the two documents that we were just looking at. But I tell them, I said, look, this is not something you actually need to fill out, but this is what you need to know the answers to. So, there are two sections: the information about the property itself and the information about the borrower. So, we naturally want to know about the property address, the purchase price, the loan amount that they want. This all typically just really comes up in conversation, and when we're looking at the property. Will it be just a purchase, or will it include rehab funding? And I get to know them as far as whether this is their beginning of property or not, because like I told you, I will tell them, I said, hey, I'm not your first stop. I have to see that you have the ability to complete these deals and have them turn out the way you say, or the way you plan that they're going to turn out, before I lend you $100,000 basically on a handshake. So I mentioned the Apartment Association of Northwestern PA, which is the professional organization around here. I pretty much make everybody join the Apartment Association. Because why? Not only because of the natural benefits of this organization that they're going to learn, because we have monthly meetings and dinner meetings with speakers that talk about things in our business, and a really good newsletter. We have an attorney on call. If they have any landlord tenant questions, they can call and talk to the attorney for free, and all these benefits. I mean, we've got a brick and mortar building with 3 employees. So it's a pretty big deal around here. If you're in the business, you belong to the Apartment Association. So I want them to join, because not only of the benefits of the organization, but I want to get to know them at the meetings. I want to see who they're hanging out with as far as other investors, as far as what cues they're taking from people, because there are certain business models that some people try to run that are not good for somebody early in the business to try to do, and maybe never do, if you know what I'm saying. So I need to get to know you and see, what you're participating, and just get a comfort level with you. And secondly, I mentioned that I do teach the Landlord 101 class. I teach it each time we have it, like 2 times a year, and I'm always with somebody else that teaches it as well. So I rotate who does that. But anyway, especially if the borrower calling me, the investor calling, is operating rental property as opposed to strictly being involved with flips, I want them to take the Landlord 101 class, and so that I know that they've had some sort of an instruction on how to operate rental property. And our association has just started including my book with people that take the class, because the book is a parallel of the Landlord 101 class and an expansion on it. The Landlord 101 starts making the assumption that you already own property, and it takes you through preparing an apartment for rent, and dealing with tenants, and ends with either evicting the tenant or renewing lease. The book is way before that, all of that, and then way beyond that. So anyway, so that's one thing that comes out when somebody first calls me. And a lot of times I've gotten calls from people and they've heard me talk all about this, and I say, look, I can't loan you the money right now, but if you join and you take the Landlord 101 class, we can do some business. And literally that's exactly what happened. And they are very successful because they joined and they got education, and it wasn't just going into this blind. So, you can see the other things on here. Is it an income property or not? And if you're going to do improvements, give me an idea what that's like. And, are you putting any money in, or do you want to borrow all the money for it? And are you buying in, or in your personal name, or in an entity? You can see the stuff here. Is there anything that needs to be paid off, which is a question whenever somebody already owns the property. And, we might be looking at paying that off with a new loan. So the big thing is, I want to know right here, I want to know what's your exit strategy, because it's one thing to have this great idea to buy this property, but this is one thing that you will learn by the time we actually do a deal together. You will have already learned how to map this out for yourself on the other deals that you've already done before we do business for the first time. And that is, is this a flip? And do you know how to get this thing sold? And do you know how to finish this in a reasonable length of time? And be able to pay off the loan when it's supposed to be paid off. Or do you know what you're doing in operating rental property? And do you actually have some sort of a relationship with a bank that you're very confident buying this rental property right now, that you in fact will be able to get permanent financing on this property when the time comes? Okay. So then the personal stuff is, we only have to answer this one time. The stuff that I just covered is different for every property. But, do you have any outstanding judgments? I'm just trying to get an idea what your financial picture is, because I'm not going to run your credit report. I'm not going to take any kind of an application that's even as detailed as a rental application. I'm not going to get your social security number or anything like that. But I'm going to ask you to tell me your story about judgments, bankruptcy, and lawsuits and stuff like that. That are you obligated to in somebody else's lawsuit or anything? And some other general questions like whether you're a citizen, and what is your approximate credit score? I mean, I just want to get an idea, because at that point somebody might speak up and say, yeah, well, it's like 550, and I'll tell you why. And so then I got to make a judgment call, based on some honesty like that. So now, professional history, what have you done? Have you taken somebody else's coaching program? How long have you been doing this? And do you have professional designations? In other words, maybe are you a realtor? Are you a broker? I lend to a lot of realtors and brokers. And how many units do you already have, and how many flips have you done? That's what it really gets down to, that sort of stuff. So that, Gary, I can send you that
Okay.
document along, with the other one. Both documents I can send to you. So
Okay.
Hey,
That's
Joel, I
great.
had a question.
okay.
Hey, so you say you usually lend to someone, say if you've done business with them before, they ask for $100,000 loan, but you've done
Right.
business with them, you were able to, you're comfortable tacking on that $5,000 to the end of the loan and running his amortization payment based off of that. Is it common, or have you ever done it with someone who maybe haven't done as business with you as much, or that hasn't done rental properties before, but they're able to bring you a deal that is structured to the T, to a point to where you see that this is almost like a guaranteed deal? Would you still be open to the option of putting that money back on the back end?
Generally, to answer your question, is no. I mean, the whole thing is like I said, very much relationship based. I've got to be able to see what you've done, and it's not the type of lending that somebody gets for the first time that they're doing a deal. With one exception, I work with a really, really good mortgage broker in this area. He's actually mentioned a number of times in the book because he contributed whenever I needed information, background information on all kinds of loans. And I mean, this guy deals with probably about 100 different banks. He's on the board of the apartment association. I got him on the board. He doesn't even own any rental property, but I said, we got to get this guy on the board. And he's actually been a lending client of mine for flips. He's done flips. And he has a real niche in the investor community. So the exception sometimes is when this guy brings me the deal, as opposed to the borrower coming to me directly. Because by the time he tells me about this deal and this person, they have been so vetted that it gives them extra points, basically. And I'll give you an example. Just a few months ago, it would have been September, October. He brought me a deal where a young lady who had a beauty shop in the first floor of a property that had an apartment on the second floor had suddenly gotten the opportunity to buy her building from her aging landlord, who was just time for him to get out. And she'd been established there for a while, paying him rent. But and she actually owned her own personal residence other than that. So he brought this deal to me, and I did that deal for her to buy her property where she has her business and suddenly become a landlord to the people living on the second floor. I probably would not have done that deal if she had just called me directly, but she was so well vetted by the time he brought him to me, her to me rather, that, based on his recommendation, I did the deal. But get this, I happened to be teaching the next Landlord 101 class right about the time that we were going to close this loan the next month. And so I made it a contingency in the loan agreement that she join the apartment association and take the Landlord 101 class. And in fact, the fee for taking the Landlord 101 class was paid at closing. So I think I would have done the deal whether we were doing the Landlord 101 class the next month anyway. But to answer your question, that's an example. So all your realtors out there, keep that in mind. If you are trying to put this together with somebody that's relatively inexperienced, but it's a really good deal, and have a really good impression of the borrower's financial condition. If you could get with a broker who deals with hard money lenders, so that the lender was actually approached through the broker as opposed to through you or the actual borrower, you might still have some luck with that.
Good question.
By the way, you know what a landlord is. A landlord is a realtor without a sense of humor.
Yeah, there you go.
Thank you for that.
Hey, guys, I want to chime in here a little bit on the Apartment Association of Northwestern PA. One of the first really big lucky breaks I got when I was started investing, when I was still working at the bank, is I joined the local apartment association where I was. And I only joined because I thought I need to hang around other people that are doing what I'm trying to do. And I went in there and I was really kind of overwhelmed because it was a big room with a lot of people. And I looked, I was, you know, historically, I'm actually quite a shy person. And that seems odd because I'm the team leader, but I'm actually kind of a shy person. So I walk in there and I looked for a table. There was a seat available where I felt like I would feel comfortable, like they weren't all in a group call conversation I was going to interrupt. So I saw this table in the corner and it was all the old guys. And I thought, oh, I'm going to join that table. They look safe. Turns out it was one of the best things I've ever done because those guys owned more properties, more units than probably the rest of the room combined. And they would go there just to have social hours, like we did a quarterly dinner, and they would, be able to sell their properties off market to some of the other people who were up and coming. They also knew all the good property managers and all the contractors. They knew all the lenders and everything. So out of that arrangement, I found my first private lender. Um, and he was a commercial lender, but also lent privately. So it wasn't hard money. The time interest rates were 9%, and he only charged me 11, 2% above the prevailing rate. And the other big lucky break was the guy named Gerhard Flufelder at the table I sat at was in his 70s, and he was 30 years or more older than I at the time, and I just kept asking him questions because he kept answering them. And finally, he said, "Would you like to just come work with me one day on a Saturday?" Because I told him I'm still working a regular job, and I said, "Sure." And we went around to some of his properties. And this dude was 72 years old, and he was still hauling refrigerators up and down stairs at 72 years old. So, and he was doing all the work himself. He didn't have a job like I did. And I thought, this guy's probably keeping all the profit. And he was. And we stayed in touch. I did that for about a year, bought one of his properties, a 5 unit building on a private note. He introduced me to other investors. And that one dinner set all that in motion. I'm telling you guys, if you have a local apartment association, they might call it something else, landlord association, whatever it is. In addition to the investor clubs that join, that one was the key move. That got me it started. That I When I joined the local investor clubs, I got a lot more business and they put me on their panels and on the radio and stuff like that. But none of that would have happened if I didn't go to the apartment association dinner.
Yeah.
You'll meet all the big property managers or the big corporate ones who have thousands of units, and all of them were very helpful. I mean, they would take me to lunch, and I mean, sometimes they would. I had one guy actually pawn off all his bad units on me. I just started my own property management company. This was years later. And he said, "Hey, I'll take you to lunch. I'll show you the ropes." I said, "Sure." And he said, "This was your lucky day, young man. I'm going to give you some units to manage. I just don't have the capacity." I found out later they were his worst units. He gave me all the crap, but it was a great learning curve. I made money, and I learned. I learned from the experience way. So in any case, try to ramble on there.
Yeah,
We do
no,
have
a lot of those organizations are called RIS,
okay.
RI, what was it? Real Estate, REIA, yeah, Real Estate Investor Association is in, and there's a national RIA organization that a lot of the local organizations belong to, that you really just put you in front of, or beside, I should say, powerful people. Like you go to one of our dinner meetings, you might find yourself seated at a round table that has a couple of new people, maybe somebody that's been doing it 10 years, or you might be sitting with the guy that's one of the founders of our organization who's like fifth generation in his real estate family and who is one of the largest developers in this part of the country. And he's just there having dinner with you. And
Yeah.
I think, Gary, you probably would agree with this. The best deals are always the off-market deals. I know you're all realtors, but
Yeah.
like he was saying, the properties just transfer from one landlord to another. When one landlord's done with them, they go to another landlord across the table.
Yeah.
So,
Well, we do those too on the team. They're off market, but really what that means is we're not putting it on the MLS. We're not
right.
publicly advertising it, but we still earn earn a fee. And there's a couple questions. One of them's from Kathy Urick. I think I know the answer because I think you may have mentioned it, but the interest on your loans, are they compound or simple interest?
Simple. Yeah, like if
Yeah.
you, in my example of borrowing $100,000, it would, your payment would be $1,000 every month at 12%. You know, the 12% of $100,000 is $1,000 a month payment, and um, it there's really nothing to compound other than, like I said, if you finance all the points right from the beginning. But even then, the payment would still be the same every month all the way to the end. You know, and I might add, when I got into this business, prime was 3.25, and I don't know what mortgages were, but let's say they were around the 4% range, 5% range, right around in there, maybe even less than that. And it was so right from the beginning, I was charging 12% interest and 5 points. My point is, I didn't change that at all when prime went to 8.5 and mortgage rates were much higher, you know, because it just seems to be the sweet spot for what works. You know, I suppose I could have, you know, asked for more money, but it, 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 I wasn't, I was happy with what we were getting. And, you know, my problem is that interest rates have been high for so long, and I've gotten new clients in that came to me for the first time when prime was up 8.5. And I'm wondering if they're going to wonder if prime goes way down again, whether, you know, it's going to come down from my
Oh
12%
yeah.
is going to come down, and it's just not. I'm going to point out that, hey, I didn't raise them when interest went up, so I'm not changing it when interest went down either. So,
Yeah. Yeah. Interesting.
but you know, I just want to tell you, um, I started out with nothing, and I pretty much still have all
oh, I like that. Yeah. Well, you know what? One of the things I've mentioned to people before is, you know, I never really regretted buying a property. There are properties that gave me a lot of headaches for sure, but I always made money on them because real estate's a very forgiving asset. You have so much
of them. Yeah,
control over it. You can remodel it. You can add a bedroom. You can add a garage. You can you know, convert a basement or an attic or a garage into another rental unit. Um, and you can get another tenant if you have a bad tenant. So
yeah,
you could always recover, you know. But in any case, what I was getting at is I do regret selling pretty much every property I've ever sold. And you know, at the time, it made sense to sell them. It was for a good, I had to, you know, it was part of my strategy, right? But
hmm,
looking back now, you know, if I'd have kept them, still had them, the vast majority of them would be paid off,
oh
100%
yeah,
completely paid off.
yeah,
In fact, they all probably would be by now. But you know, I could be my own bank. You know, and I mean, I have no debt, so I'm pretty good in that regard. But as far as lending, you know, imagine how many people you could help if you had 250 units completely paid off, bringing in, you know, theoretically easily 50,000 net operating income a month right now with no debt on it, just
mhm,
taxes, insurance, maintenance, repairs, and vacancies. That's not an outlandish statement. That's very very realistic, and you can do it in it easily less than a third of your life. You can accomplish that. You know. So, in any case, the moral of the story is you know, real estate over time. I've never seen it go to zero. It goes up. Yes, does it dip every now and then? Of course it does. But overall, the trend has always been up because it's leveraged. You're not paying cash for every single one. You're paying 20% down on average and financing 80%. So it's 80% leverage. It means if I buy $1 million property, I only put in 200,000. If I sell it 10 years later, it's likely going to double to 2 million. The mortgage is paid off. But so what I've done is turn 200,000 into 2 million. That's an incredible rate of return when you do the math on that. Um, so keep these lessons in mind, guys. And Joel, if they go to joelmillerbooks.com, is that the best place to get the book, or is it on
yeah. We
Amazon
don't.
or
What you'll find on that website on the homepage, and first of all, let me tell you, that the book is the only thing I have. I do not have a course. I do not have mentoring for sale. I don't have a seminar, anything like that. I just wrote this book for the passion of getting this out to as many people as I can, just from my experience. And so on the homepage of the website, among other things, if you scroll down, you'll see a button that it will show you the entire table of contents in the book. So you can see exactly what's in there that we cover. And another button that has the excerpts from each of the chapters. There's a few paragraphs from every chapter that you could just read. You would probably, my call to action is to just tell you to go to the website. You'll probably learn something just from looking at the table of contents and reading a couple of paragraphs from each of the chapters. So to answer your question, Gary, on each of the pages, on a couple of different spots, there's a little button that says buy. And if you click on that, it will take you directly to the Amazon page where it's for sale. And you just buy it from Amazon and order it right in. We don't sell it directly from our website. It's you just click on the link to the Amazon page and you get that. But you can find me on Facebook, LinkedIn, Instagram, X. I got to tell you something cool. So I got the book done. I'm starting to promote it, and it became a bestseller. But I realized I needed to do something to connect more nationwide. So right before Christmas, I signed with a podcast booking agency, and they got to work the beginning of this month booking me on 4 podcasts in the real estate / investors / personal finance space for a month for a year. And I've done a couple already. There's 2 more booked for the month and to do later in the week. And that's how I connected with Gary, because I was talking about doing that with Joe Herbert, and Joe said, well, you got to meet my friend Gary and be on his thing. Next thing I know, Gary's asking me to do this thing tonight. And, maybe we'll connect on a podcast later. But so anytime I appear on any of those things, I've got to post, like I'll post it tomorrow, probably, that we had this thing tonight, and I hope that'll gives them exposure to really have a takeoff on a big fashion. Ron LeGrand.
Yeah.
I'm sure you all know Ron LeGrand. Ron LeGrand took a look at the book, and he wrote a review on it. It's a paragraph, but the last sentence in the review is, I wish I would have had his book whenever I was getting started.
Yeah.
So that's Ron LeGrand's take on this book.
Yeah. Yeah. He's I've been down to his place before in Jacksonville a couple times, actually, and had lunch with him. Had a part of his mastermind for a while, and with his sister. And interesting, the saying amongst the group was, if you haven't been yelled at from Ron LeGrand yet, you haven't lived. So he didn't know.
Well, one of Ron's disciples, his name is Steve Zumigale, is somebody. Well, this brief story here. Steve's early 40s, and Steve's mother and I are the same age, and we've known each other since junior high. She became my realtor as soon as she got in the business, was right when I was starting to flip houses, and so she's the only realtor I've ever used to sell any of my property. Nice. Steve became a realtor and started working in her office with her, and saw all the transactions that I was doing that his mother was a part of, and all these checks that I was getting from flipping houses. And he said, that's what I want to do. And he really dove in. This is only like 6 or 8 years ago, and started, he has a master's in real estate from Ron LeGrand's organization, and became one of Ron LeGrand's coaches and speakers. And actually was the one that introduced me eventually to Ron LeGrand when we brought him to town here. And Steve contributed an entire chapter to the book, bonus chapter that basically digests all the best stuff that he learned from the Ron LeGrand organization. as
Mhm.
far as uh, different ways to finance investment property. That he expanded on
Mhm.
some of the more simple stuff that I covered in the book.
Yeah. Well, another almost hidden golden nugget there, buried in all the content was, guys, he gave all of his flip sales to his realtor. And how many homes have you flipped?
Over 100.
So over 100 transactions
Yeah,
from one client, guys. I'm telling
right.
you, that's why I
Now,
love.
I found a lot of the properties myself. In other words, I was buying them at auctions and other places like that. But she probably brought me, I don't know, 20 some of those deals that immediate, deals that were immediately coming on the market that she alerted me to, and so she got both ends of that. She got a
Yeah,
commission whenever I bought it and when I sold it. But I always sold properties through a realtor, except on rare occasions where somebody saw us
mhm,
working on the house and they, started talking to me about buying the house before it was even done, that kind of thing. But generally, the
yeah.
procedure was for me to finish it and put it on the market with her.
Well, the thing is, I mean, if you're an agent, you represent a flipper, you've got almost 100% certainty it's going to sell because the flipper has to sell it. It's the business model.
Right.
They're going to sell it. And they're all remodeled. I've never
Yeah,
sold a
that's what I was
flip
just going to
home.
say. They're all in tip-top shape.
Yeah, exactly. There's no garbage around. The yard's cut. It's beautiful and it's easy to sell. So it helps your reputation. When people see you selling nice homes quickly like that at a good price, you're not going to have a lot of price. You'll get all the sign calls, all the business guys. I could go on and on, but I hope you get the picture here. When you work with a flipper, when you sell those properties at the remodel, it benefits you in at least 3 or 4 different ways
Yeah,
immediately.
and
You know?
if you have a really good relationship with that flipper
Mhm.
slash investor, you'll do what I did most of the time, which was I had Margelle is her name. That's Steve's mother is Margelle. I would literally have her come in and just tell me what she wanted because she was the one that was out with home buyers every day, all the time,
Yep.
keeping track of what the trends were. Uh, much more than me. I'm not helping people buy their homes where they live in. If it were up to me,
Hmm.
every room would be antique white with maybe white trim and, very generic. And but I would do that maybe for some low level properties that were just cookie cutters, we called them. But anytime I
Yep.
realized I had a place that if I just made sure that this was trendy, I would just have her come in and tell me what to do
Yeah.
because that way
You know,
she knew she was getting a listing, so she knew that by the time we were done with it, the way she wanted it would sell like that.
it's funny. We had a guest teacher probably 3 years ago, maybe 3 years ago, and she was on with her client. It was Christine Hyatt and one of my old students, Benny Julio, the guy that he owns a bunch of restaurants. But in any case, remember, guys, she said she just tells Benny what to do because she knows she can sell it. How'd
Mm-hmm.
you like to be in a position like that with your investor client where you tell the investor you need to buy this kind of property, remodel it this way?
Oh
I
yeah,
mean, it doesn't get any. She
she would
was working
literally
her.
go with me.
Yeah,
She would meet with me with when the kitchen design person came in and go with me
yeah,
to the kitchen design shop and make sure I
yep,
was buying all the right materials.
yep, yeah. In fact, I'm going to call Benny tomorrow. I haven't spoken for a while. Um, okay. Hey guys, any other questions? I know we're getting close to 8:30 here. We're going to try to wrap it up at 8:30. But any more questions? I see the website's on there, www.joelmillerbooks.com. So it's JOEL Miller MILLER books.com and get the book. Um, Anything else on the website, Joe, that be might be helpful or useful or of interest to these guys?
You're asking me what's on there? I
Yeah,
see. Uh,
yeah.
it is no, it's really built to just describe the book and keep
Yeah.
track of like for example this appearance was listed on there that it was coming up and
Mhm.
um, uh, it's not, and it's about the author. It's about the book. You've got the table of contents and the reading from each of them, and reviews. And there is a way to contact me. So let's say down the road, you did have a question, just go to the website and there is a contact me page on there that you can write out whatever you want and click send, and I literally get an email with your question. So I'd be happy to get back to you.
Yeah.
Okay.
Hi, Joel. I'm sorry. Last minute question, I guess.
Sure.
There are two ways to read your book, one on paper and the other one the electronic.
Oh, yeah.
Which one?
It is available in ebook. Yes.
Excellent. Which
Thank
way
you for
do
pointing that out.
Of course,
PDF.
of course.
Yeah,
Yes.
I often forget about. I am not an ebook guy myself, so I tend to forget that my own book is available that way. If it goes well enough, I keep getting asked for an audio book. Maybe we'll do that. But do you have any idea how long it would take even a disc jockey like myself to read 450 pages in a studio? But we might do that eventually.
Awesome.
All right. Yeah. So I guess you kind of answered my question as to which method you would prefer or you would suggest.
Well,
is it a book that you could take notes from, or?
Oh, okay. I got a good response for you here. I almost forgot to tell you. I did something really special with the way the book is laid out. I put in a whole lot of bold type words, sentences, paragraphs, and so on. So it's designed that if you did nothing but skip from one bold type group of words to the next, to the next, to the next, all the way through the book, you will get the whole idea of what's going on. But if you were in an area that you thought you just wanted to know more about, then just stop and read all the words. Okay. And there are lots and lots of bullet points in there, like bullet point lists of like questions to ask prospective tenants, people to call about someplace you're advertising, questions to ask references that people have given on their application to rent. Like there's a group for landlord questions. There's a group for employment reference questions. There's a group for personal reference questions. So what people have said, and you will see this if you go and read any of the reviews on the website or on the Amazon site, they are saying that this is not the kind of book that you buy and read, and when you're done, you say, that was great, and you put it on your bookshelf. This is a book that you read and put on your desk because it's a reference book. It's the new go-to resource of how to change your life with rental property. And there is a chapter in there about flipping, but it's only about flipping. The book is supposed to be about rental property, but I did put a chapter in there about flipping, and then at the end of that chapter, there's a QR code that takes you to a page that you can't see on the regular site that is all the how-to flipping material. You see, I didn't want to put the how-to flipping material in the book about rental property. So if you have the book though, or ebook or the paperback version, you just use a QR code and it'll take you to a whole lesson on flipping. But my favorite way of having this book would be just like this, on my I keep my own book on my desk. How can you remember 450 pages worth of stuff, So
yeah.
All right. Thank you very much.
That's the kind of book it is. And that might be a little easier to do if you have a paperback as opposed to an ebook. That's my answer. That's all.
Okay. Well, Joe, I just want to thank you again for doing this. I know it's been, it's nighttime for you. I'm sure it's cold. I think I saw on your screen share it was 30 degrees already, and it's not even midnight yet up there.
Oh,
but
yeah. Yeah,
we
it's
appreciate
31
you.
now. It's a balmy 31. Warmed
There you
up
go.
from -2 from the other day.
Well, I appreciate you doing this, and guys, I hope this gives you more insight, not just for you and as an investor, but also other ideas for you to share with your clients. There's always an option out there. I mean, I don't want to go in a lot of details, but we have an agent on the team. I'll just tell you, Henry Perez has got 2 deals right now that are both teetering on the edge. And you'll learn in this business, hopefully sooner than later, you do everything you can to keep these deals together. You do everything you can. If it's important enough to get into the deal, it's important enough to maintain it, because you're going to have challenges and you're always looking for options. How can I solve this? Well, if somebody's financing's going awry, maybe a hard money loan is the way to go temporarily, but just you can never learn too much. So keep this stuff in mind. And if you could, by the way, please give Joe a big thank you. If you don't mind, a hand raise or a clap,
Thank you.
or just type it in the
My
chat
pleasure.
box.
My pleasure.
Yeah. And if you guys could please set up some one-on-ones if you haven't set one up recently. Tomorrow's pretty well booked up. You have to schedule 48 hours in advance anyway, so you're looking at Thursday now. But please do that. And if it has to be next week, it has to be next week. But keep every day, wake up, put on your work boots, and swing the bat. And I want to congratulate Lisa, because Lisa, I'm pretty sure I saw over the weekend a listing and a transaction coming through all in the same weekend. All right. Yeah, that's a way to start off the year. So
Yeah, racing the
yeah,
roof, Lisa. All right.
that's it. So,
Gonna
keep
be a
inspiring
good
each
year.
other.
I can feel it. It's going to be a great year.
It is. We already started off good. I tell you, we celebrate success on the team, Joel, and it's just people who are success minded, abundance minded, thrive on the success of others because it's inspiring. We all know each other. We know if Lisa can do it, Kay can do it. If Kay can do it, Tom can do it, and so forth. Um, and I just, it's just part of the culture. So keep that in mind. Support each other, help each other. I'll see you on the one-on-ones. We'll see you next Monday. Next Monday, by the way, we switched. I was supposed to teach next Monday, but I switched with the guy. He's teaching Monday, and that is Eric Pierce, and that is on. Hang on, business planning. I think he's also a tax accountant, if I'm not mistaken. But maybe bring people to that class too. So, Joel,
And
thanks
I
again,
also
everybody.
I want to apologize. Last week I was on the call, and just as Gary was about to mention that I was teaching this week, the power went out here, and I just totally lost my connection with the Zoom call.
Yeah.
But, I do have one image I'll put up here at the end, if you don't mind, Gary. Just a different.
Sure.
There it is. So
There you
see
go.
a stack of books there.
That's a good looking book.
Yeah.
450 pages.
Yeah. So
Awesome.
thank you so much for having me on and staying on the call. I'm honored anytime anybody thinks that they want to pay attention long enough for me to talk that long. I appreciate it, and I hope you learned something either as a borrower, as a lender, as a realtor helping an investor, that you've got it in your tool belt now. And again, if you have any detailed questions about it, if you just go to the site and go to the contact page and send me something, I'll get back to you.
Awesome. Well, thanks, Joel, again for doing that. And thanks, everybody, for participating. God bless you and your loved ones. And I will see you next Monday night and also on the one-on-ones.
All right. Cool.
Bye, everyone.
Bye, everybody.
Thank you for watching this episode of Monday Night Live. Be sure to subscribe to our channel and go to realestatewithgarywilson.com to join our community and start building wealth today.